Good afternoon, everyone. It's Chris from Soul Society R as well as Excel. You can find us on both websites, Twitter, Instagram, as well as Discord. Remember, we use this adaptive algorithm for side market, up market, as well as down market. It's built by traders such as myself. And remember, this is for educational use. We're not a broker dealer. Past performance doesn't give us any indication of future results. Let's take a look at the 1st of January 11th, what the market outlook is going to be for the coming year or for the coming quarter. Let's go to the first slide that I have up here. And I put what is going to drive the stock market in the overall. We have to pay attention, first of all, to inflation, which is very important if cost of things are started to come back down. Rate cuts from the Federal Reserve Board, whether it's in the domestic market, Eurozone, Asia, as well as Australia and Canada. Second thing we have to look at is the Federal Reserve Board. Last but not least, are we going to be going in recession, or are we looking in the international market as well for war and etc in the economy? Let's go to the next slide. What I have here, what are we going to talk about is gross expectation using adaptive algorithm. We're going to look at Bitcoin in relationship or the ratio to the Fortune 500, including the gaps that are fillable. And sometimes they are tested, they do hold. Sometimes they don't hold, and then we end up falling a little, we get pushed a little further than that. We're going to look at the Schwab large cap growth, VTV, Vanguard Value Play, XLP, Consumer Products, SPY, which is the Fortune 500 company, XLE, as well as the small cap IWM. We do have IWN, which is the value play. Realistic expectation, the most important thing, looking at the earning reports, rates, and inflation in relationship to the earning of the companies are going to be reporting in the coming quarter for the year, see where we stand at. So let's go to the next slide. Next slide, I put Bitcoin and I put the S&P 500 next to each other. And what I wanted to do, I used the weekly. Each bar represent 1 week, which is 5 days in the market or 4 days. It depends if we have a holiday or not. After the push up from the January low till the December high, we can see that Bitcoin is flagging up here, but we do have a gap after the breakout of that 74,000 area. This is very important, looking at the relationship from the highs to the lows, mid of August, where the lows were, and the 50 simple moving average. But I am paying attention to if Bitcoin is going to get a relief back down after Trump going into the House, because this is usually gaps are all fillable most of the time. And here in relationship to the S&P 500, if I look at the SPY from the low to the high, we have about 32% till December highs, but we started to fall down. You can see that 18 SMA, we closed right on it. Usually Bitcoin leads the S&P when it's going to come down and start to rally back up. You pay attention to Bitcoin, vice versa, the ratio to the S&P 500. And you can see that the RSI on Bitcoin on the weekly starting to bend. We're getting lower highs as well in the S&P since the July high and August low, September lows, and the rally back up. You can see that the RSI is creating a lower high on the weekly bars in a downtrend. So this is very important. Does the 18 hold, or that linear regression channel from the November lows to the August lows of 2024? This is linear regression channel is very important. We have the 18 and the 50 on the weekly right there. Last but not least, once again, you can check us out on the website, get in contact with us, share with your friends, smash the like button, let us know what you think. Let's go to the first slide that I have up here, and I put the IWM, which is the small cap ETF for the Russell 2000. And what I wanted to do is show you the January low. I did not want to talk about the prior year to 2022. There's a gap here. There's the rally. And we do have another gap on the right side. So what I want to do is zoom in, show you the July low and the September low when we tried to break out. This area is very important. We retested it and fell down. We are testing the 200 SMA and that downtrend channel on the chart. The most important thing that we are required to hold the September as well as this large consolidation, because if I take a look at the 210, 211, 209 here, the look above the fail, we got these two gap, the rally back up, there's a gap here, the rally come back, retest and bounce off. If I zoom in here, so I want to look at the 210, 212 area as well as this gap here. What I want to do is go get a box in the charts, highlight this area because this is the gap. Oops, we filled a portion of it, so let's remove it. We redo it because it's inaccurate. Here we go. We're going to extend it to the right. Edit the property, and we're going to go till 2025, first of the month. Let's do that. 114. We can do 114 so everyone can see where that gap is and the 200 SMA. Even coming back to this gap, retesting it and the 250 SMA and bouncing back up, that would be a great area for that consolidation. If not, and it falls further, we're looking for the September lows here in this consolidation before the breakout on the charts in IWM. Let's take a look at the SPY, which is the ETF for the S&P 500. In a similar situation, we can take a look at the January low to this high. And if I zoom in here on the charts, after looking at the 565 here in July, August low, the August highs, as well as the September lows, this is a very important area of consolidation because we tested it once, twice, breakout 3 times, and eventually 4 times and rallied up. Coming back to the 116 SMA and retesting this area for support, it is very important that it does hold. If not, we will look for that portion because you can see that this gap here, we filled a portion of it. If I zoom in and I grab this and I activate it, and what I can do, remove it. Hold on, let's just remove the box. Remove the rectangle. I'm going to activate another box to this area, and this is the gap that we have still that has not filled 100% of the move. And I can zoom it to the right a little bit just to show where it is in relationship to the overall market and the 116 SMA in the S&P 500. Let's take a look at right now VTV, which is the value play in Vanguard. And you can see that the Vanguard value, it created like an M pattern holding the 250 SMA just right on it. I am worried about this area. It doesn't hold and it comes back to the 250 on the consolidation of the 163 area, 164. This is a very important area to hold in the value play ETF for the S&P 500. Let's take a look at schg, which is the large cap growth from Schwab. And we can see that we are starting on the RSI after making this high and lower highs here. And we were in an asymmetrical triangle. We lost that 18 SMA. We lost the 50 SMA. We may be looking in the area of this consolidation where the 26 was. And the backside of the 200, the 116 SMA between the 116 and the 200 for this consolidation for a bounce back up. And you can see that the RSI is in a downtrend until it touches the 38.2 if it finds support, or it breaks above the 50, looking back towards the 61.8 on the RSI resistance and support in the Charles Schwab large cap growth. Let's take a look at the XLE. Well, I'm going to show you that the energy sector has started to show some relief after looking at the consolidation of in February, January lows, that big consolidation. We retested it in September, tested it back in December, and now we're starting to rally. We came back from the lows to the high above the 50%, but we do have the 50 simple moving average, the 200 SMA, and the 50 Fibonacci from low to high acting as resistance. Pay attention if we're going to create a cup for continuation or coming back 1/3 in that downtrend wedge to continue higher in XLE. Let's go to the XLP, last one in the ETFs, and I'll go to in details how to do the measured move on the S&P 500 or the Nasdaq. It doesn't matter. We can look at that the consumer staple sector from the January low to this high. We fell quite a bit and we lost the 250 SMA as well as the 200 and the 116, and we have the 50 and the 18 crossing. This is what we call a death cross. I am paying attention to this large consolidation here in this area, which was the 75, if it's going to hold. If not, I will look for the backside of the area of $75 for taking a look at the consumer product and staples if there's going to be interest back in that sector. Let's go take a look at the micro ES, which is the Fortune 500. This is on the daily chart. And what I want to do is grab a measuring tool to show you where the highs were, where we were from the January low. Oops, that's the wrong one. January low to the high. You can see we did 239 bars higher, which means that when we traveled, each candle represent 1 day. So we had 239 bars going higher. We had a 31.09 return in the S&P 500 last year. But if I take it down to where we closed today, we have a 24.3% from the last year's low. So if I take the highs to this low and I measure it to where we closed today, we have lost 5% in the S&P 500. Can we come back to the 200 SMA? That's about 9%. If we come back to the 250 SMA is about 11%. And if we end up losing 15% and bouncing off that 15, that would be about almost 500 and 5,237, where this large consolidation was in the E-mini. So let's zoom in here and take it to from a daily chart to an intraday chart. On the intraday chart, what I want to do is use a 30-day intraday chart and a 6-hour chart or a 4-hour. It doesn't matter. It's going to show you the gaps in the overnight. They are the gray areas. This is the Asian market to the European market before the New York Stock Exchange opens. We can see that the between last month high and the low that we created this week, this is the high and low. And most machines will grab the high and low, or most people will grab the nearest 2 points high and low. I don't. For a measuring tool, what we do, we look at the 5-day range that the market has opened. And what we're going to do is zoom in here. What I'm going to do, we can see that we have a gap up here. We filled this gap when we were pushing up. Let's just go get a measuring tool. This is my measuring tool. We're going to count the last 4 days, from Friday through Monday and Sunday high. This is the high for the week and the low for the week. And I'm going to extend it to the right to show you where those levels are. Edit the property. We're going to go back in history till 12:15. And that should be sufficient enough to take us back enough to see where, oops, what happened? We lost it? Oh, then what happened here? Edit the property, almost, okay, 12:15:24. My fault. Okay, here we go. We can see that the highs were almost in that area and the lows were in that area. So my weekly range for the high and low, the 50% retracement, as long as we stay below the 50%, sentiment is bearish. We had tested once, twice, 3 times. And if we cannot clear 58.88 to the upside to continue back to the 59.23 and continuing higher, we may end up falling further to the 50% and the 80%, which is a 78% and 100% retracement. This area would be a buy zone for the first test, and vice versa if we rally back to the 50 and the 61, vice versa to the upside where the 80 and the 100% are. To the upside will act as resistance, and if we end up breaking, we'll look for the high. If not, we'll look for the low. That's the measuring instrument for the S&P 500. Let's take a look at the micro NQ. We did it last week, and what I did, I wanted to leave this alone. I want to show you how to edit it in order to adjust the levels from the prior week's range. So if I click on it and I just get rid of this one and put it on a arrow, and I right click on the study, activate the properties. You can see I already done it prior week. So we grab the highs for the week. We grab this week's low. And what we do, we edit the properties and activate it to the left. That way we have our levels. 4. And we're going to go till 12:15. We'll do 10 so everyone can see what we're doing. Okay, you can see where the highs were for the prior month and the lows. We tested it 3 times. We are underneath the 250 SMA and the 200 SMA on the 6 hour chart. If we end up losing this area, the extensions to the downside would be the 50, 78, and 100%, and vice versa if we reverse back through the top and clear the 38, 50, 61, and going back to the 78 and 100% retracement to the upside. So I hope this will help you understand the levels on the S&P 500. What I want to do is do the micro BT as well, micro BT for Bitcoin. And you can see that micro Bitcoin, after creating this high for the annual high, this 92,000 area is very important. 91,750. We tested it a couple of times in this area. We bounced off and tried to rally up. So what I want to do, go get the measuring tool and draw the chart for the downtrend to the as well as the upside. And we can keep an eye on those extensions to the left and the right. Edit the property. 12. 10, 20, 24. And we can see that this level of resistance where it is, when we looked above and failed, we came back, retested that 94,400, 500 area a couple of times, bounced off. We couldn't clear the breakout. We fell back down in the range. This 50 SMA and the 18 SMA is going to act either as support or resistance. If we break through, we get to the 50 Fibonacci and the 61.8 and the 116 SMA. If not, and we end up falling and losing the 200 SMA, my extensions would be to the downside as well, to the bottom end of the 78 to 82,000 for trying to get back into Bitcoin to the other side. And if we end up breaking up, I look for the 61, then the 78 to 100% retracement before the breakout above that zone where we ended up losing Bitcoin at 100,003, 103. So let's call it 103. So this area is very important if we're going to continue. If not, we are in a downtrend. And my RSI, let's just go get a linear regression downtrend channel, or a channel to draw from point A to point B, which is the control points high and low. You can see that we are in a downtrend and we have these three bottoms. This is very important on the daily chart. We're going to go time frame custom. We're going to look at from the January low. We're going to go probably till 12/1. Just take it back till 12/24. We're going to do daily. Push OK, so that way everybody can see this is daily. And in a month, 24. Oh, oops, my fault. 12/23, because I wanted to show a little bit. Here we go. If I look at the Fibonacci from highs to low, this is the highs for the year. This is the measuring tool coming back to fill the gap on the chart. And this is why this matches, if I extend it further out. Let's just go back to 0, right? And you can see where that extension between the 80 and the 100 are in relationship to those Fibonacci's. Let's just do this on a different scale color. Just set up the color as one. Set color. That way everyone can see where those levels are on the retracement and filling up this gap in case the sentiment ends up to be in a recession. We're getting a shoulder. This is the shoulder. This is the head, and this is the other shoulder. And you can basically see it in the charts if I create an oval. So I hope this was helpful. If you have any question, once again, check us out at Solstice ATR. Get in contact with us and let us know how we can help you. And remember, in this, pay attention to inflation, Fed policy, rate cuts, and recession. And once again, smash the like, share with your friend, and subscribe. Over.